Technological, political and social winds of change will require investors to maintain a more active watch on their portfolios in the year ahead.
In 2014, sitting on your hands is not going to be an option. Consider your personal objectives and comfort level with the individual investment. For example, gearing into property has become popular again. This strategy may turn out fine for some, but it's vital that people don't overextend themselves. Baby boomers are spending more on travel, housing, technology and healthcare more than ever before. All this creates investment opportunities. Innovation separates the best companies from the rest of the field. Companies such as CSL pour significant resources into research and development. With the growth of the middle class, their market is snowballing and their innovation is their competitive advantage. As the baby boomer generation exits the workforce, companies such as Seek will come to the fore. Increasing demand for aged care services is also likely to benefit providers such as Ramsay Healthcare and Sonic Healthcare. The coalition means a more business-friendly and less frenetic style of government is more than likely for 2014. We also expect more merger and acquisition activity, particularly in the agricultural sector, as bids emerge from overseas investors. China's middle-class growth leads to greater demand for wine and fine foods, while the pickup in overseas travel by Chinese nationals will play into the hands of Sydney Airports and Westfield Group. In recent years, Australian investors have been relatively nervous about investing offshore. With a subdued national outlook in terms of domestic growth, it might be worthwhile investors seeking access to high-quality brands such as Apple, Google, Microsoft and Johnson & Johnson. The chase for income has intensified. When selecting stocks, be wary of focusing solely on yield. Strong cash profit earnings to support dividend payments are what matters. Infrastructure and property can provide long-life, regular income streams that, if managed correctly, should also deliver a level of capital growth over time. Most portfolios for investors in Australia are showing a heavy overweight position to the banks. Switching investment funds between the big four could be appealing to some, while investors buying the banks on the capital growth story may need to lower their expectations for 2014. Contact Prescott Securities to register to receive a copy of the 10 best investment ideas for 2014.